What if I told you one geopolitical move could send oil prices exploding overnight? Not slowly, not gradually, but fast. And here's what nobody is telling you. Some investors are already positioning for it, because when war escalates, money moves first. Right now, the world is sitting on a fragile edge. Tensions are rising across multiple regions. The Middle East is heating up again. Shipping routes are under pressure, and global powers are watching closely. Countries like Iran are at the center of energy geopolitics. Meanwhile, organizations like OPEC control a massive portion of global oil supply. Now here's why this matters. Oil is not just a commodity, it's the bloodline of the global economy. Transportation, manufacturing, energy production, everything depends on it. And when supply gets disrupted, prices react immediately. Here's what nobody is telling you. Oil prices are not just about supply and demand, they're about fear, expectation, and risk. When traders believe supply might be disrupted, prices start moving before anything actually happens. This is called a risk premium. And during wars and geopolitical conflicts, that premium can explode. Let's break it down simply. If oil traders think war could block a key shipping route, they start buying oil contracts early. That buying pushes prices higher, even before the first real supply shock happens. And if the conflict actually escalates, that's when things move fast. The critical choke point. Now here's where things get serious. There's one location the entire oil market is watching: the Strait of Hormuz. Nearly 20% of the world's oil passes through this narrow waterway. If conflict disrupts this route, global supply could be hit instantly. And prices? They don't wait, they spike. This is exactly why geopolitical tension matters so much for markets, because a single event can change everything overnight. The market reaction pattern. We've seen this before. During past conflicts, oil didn't rise slowly. It surged fast, and markets reacted immediately. Energy stocks jumped, airline stocks dropped, inflation fears increased, and global markets became volatile. This is the pattern smart investors watch, because history doesn't repeat exactly, but it often rhymes. The opportunity. Now here's the part most people care about. Where is the opportunity? When oil prices rise rapidly, certain sectors benefit. Energy companies, oil producers, refining businesses, companies tied directly to oil revenue. Firms like ExxonMobil and Chevron often move with oil prices. But here's the deeper insight. It's not just the big companies. Smaller energy firms, service providers, and infrastructure companies can also see strong moves, because when oil prices rise, the entire energy ecosystem expands. The second-order effect. But the real story is even bigger, because rising oil prices don't just affect energy, they impact everything. Transportation costs increase, manufacturing becomes more expensive, food prices rise due to logistics costs. This creates inflation pressure, and when inflation rises, central banks react. Interest rates become a factor. Stock markets adjust. This is how one geopolitical event ripples across the entire financial system. The warning, or risk. But here's the critical part. Not every geopolitical scare leads to a sustained rally. Sometimes tensions cool down, supply disruptions don't happen, and prices fall back quickly. This is where many investors get trapped. They chase the spike and get caught in the reversal. That's why timing matters, and more importantly, understanding the situation matters, because markets move on expectations, not just reality. The bigger picture. Right now, the global energy system is under pressure. Demand is rising, supply is tight, and geopolitical risks are increasing. This creates a volatile environment, but also an opportunity-rich one. Some investors will ignore it. Others will react too late, but a few will prepare in advance, because they understand one simple truth. When geopolitics meets markets, things move fast. Conclusion. War escalation is not just a headline. It's a market-moving event, and oil sits at the center of it all. Prices can spike quickly. Opportunities can appear suddenly, but risks are always present. The key is not reacting emotionally, it's understanding the system. Because the biggest moves in the market often begin before the headlines, and by the time everyone is talking about it, the smart money is already positioned. CTA. If you want to stay ahead of global money moves, subscribe to the channel.